Flat Earth Trading Society members. We are on to trade number 2. And remember, the reason we're doing this is we are trying to show that the exit is the most important, not the entry. So we're going to be choosing random methods and applying our position management strategy. And what is the random method of trade number 2? It is D&D dice. Now, I grew up playing D&D. I love D&D. I still to this day play D&D with my adult kids, but now it's called Drinking and Dragons, not Dungeons and Dragons. So let's get into the pick. All right, so here we've got the Dungeons and Dragons dice. It's my favorite dice set. All right, I'm going to take the 20-sided dice. So this has 20 numbers on it. I'm going to take the 4-sided dice, and let's take the 12-sided dice. These are going to be the 3 that we are going to roll. And what I figured is we're going to do letters. So this is a 20-sided dice. We are going to roll this, and whatever number it rolls, we're going to figure out what number of the alphabet that is. Now, for the 4-sided die, we're going to do this for only vowels. So our trade is going to have at least one vowel from the 4-sided dice and 2 consonants, or it could end up being a vowel from these 2 dice. So we're going to do the 20-sided die as the first letter, the 4-sided die as the second letter, and the 12-sided die as the third letter. So here we go. Okay, we have a natural 1. Uh-oh. For any of you that play D&D, you know that a natural 1 on a 20-sided die is not a good sign. So that is an A. We have a 2 on the 4-sided die. That's going to be the second vowel, which is going to be an E. And we have 2. So A, E, E. Those are some pretty bad rolls, to be honest with you. I do not like the chances so far on this trade to roll a natural 1 and then a 2 on a 12-sided die. Again, if you're not into Dungeons and Dragons, you don't know what this means, but those are really, really bad rolls. So let's see if there's a stock with the ticker symbol A, E, E. I already know there's not. So remember, the rule is we'll drop the last letter. So we'll look for A, E, E first, then we'll look for A, E, and then we'll just look for A. And I know there is a ticker symbol A. It's a stock, healthcare stock called Agilent. Here we are in TradingView. I'm going to go for AEE. Wow, there is a stock, AEE, Amarin Corporation. I need to pull a volume on this. Make sure that it fits our volume criteria. All right, so let's see. It is volume of 1.7 million yesterday. So this definitely has enough volume. So our rule is we've got our 13-period EMA. It is sloping lower. And I've got it on the wrong template. We get ATR. So here we are. Sloping lower. This is another short. This is going to be another short as the 13 EMA is sloping downward. Current price is 83.16. So let's go in and build a trade. We've got the date filled in. Let's fill in the symbol and the direction and the entry. So here is our trade all filled in with the information we have. We don't have the size yet because we have to figure out where our stop is going to be before we can do position sizing. So let's go figure that out. We've got our short entry of 83.16. We need to go figure out what the ATR is. And then remember, we're going to do a 2 times ATR above the price. So let's go get what the ATR is. Here we are back to the chart, and we can see that the ATR is 1.56. So 1.56. Let's fill that in. We've got the ATR in. Now we need to figure out the stop. Remember, the initial stop is 2x ATR. 1.56 times 2 is $3.12. So we need to take 83.16 plus $3.12. That's 86.28. Now we've got all this figured out, we need to go back and fill out the last thing, which is position size. We need to know what is going to be our number of shares to maintain that 1% loss risk. What we need to do now is jump into a position sizing calculator. We'll go back to using this one off of chartyourtrade.com. All right, so the total portfolio amount. All right, so this is going to change now that we have a little bit more capital. Let's go check our capital balance. All right, let's get our account window out here. Let's see, we've got $102,140. So let's run the calculations off of that number. So 102,140, percentage of risk, 1%. Our entry price was 83.16 and our stop price is 86.28. We'll go ahead and just hit this compute button. And it's going to give us 327.4 shares. We'll just round that down. 327 shares is the correct answer, giving us a risk of $1,021 and a risk of 3.7%. We've got everything filled in now. All that's left now is to make the trade and put in the stop. First, let's put in our stock, AEE, Amarin Corp. I have no idea what they do, no idea what sector they're in. It doesn't matter. That's the beauty of this. Our quantity. Up here in the order window, I'm going to put in the quantity. The quantity is 327 shares. And I'm going to be selling it short. And again, I'm just going to do it right at the market. We're going to do a market price. And I'm going to go ahead and hit the sell button and submit. Here is the order. And that order has been filled. 83.35 was the fill price. So 83.35. So let's go back and adjust our numbers a little bit to make sure we're adjusted to the right stop. Adjusting for our actual fill price of 83.35, we're now going to adjust that stop upward to 2x ATR. Our stop is going to be at 86.47. Let's put that order in. This order is going to be a buy stop, so we're just going to simply use the same information. We're going to do a buy. This is going to be a stop order. Oh, sorry, I did this last time. It's going to be a trailing stop. So it's going to be a trailing stop, and the stop is going to be $3.12. That is our trailing stop. We're going to make that good till canceled. We're going to hit submit. There we go. That order is now out there. This trade is in the books. So what do we do next? We sit back and watch and wait. And look, it's either going to get stopped out or it's not. And if it goes our way, what are we going to do? We're going to move it. Once we reach 2 ATR profit, we're going to move it. And then if it keeps going, once we reach 4 ATR profit, we're going to move it to 1 ATR trailing stop. And then we do nothing. This is where we become a spectator. It's very hard as a trader to be a pure spectator, because we think we can control it. We think we can handle it. No, look, the best thing to do is let this thing run and be a spectator. That is trade number 2. We'll see what happens.